Hello, welcome to the course Financial Management. This is a 10 module course, and we'll be going through each of the modules one after the other. Today, we'll be looking into the introduction to financial management, where we will talk about the basic financial management principles, the concepts, its objective, and also the role of financial management. And I want you to listen attentively as you go through. What is financial management? Financial management is the strategic planning, organizing, directing, and controlling financial undertakings in an organization or institution. We could see key concepts there. It is strategic planning. Apart from that, we could see organizing there, we see directing, the controlling of financial undertakings of an organization. And beyond that, we also see financial management as an area of financial decision making, which harmonizes individual motives and enterprise goal. This actually highlights the role of financial managers in aligning personal stakeholders' interests um, with broader corporate objectives. If we will also still talk about financial management, it is described as the operational activity of a business that is responsible for obtaining and effectively utilizing the funds necessary for effective operation. So we see that it's portraying effective management, effective use of the funds or resources that an organization has. And this places a very huge importance on financial management in an organization. What can we say is the purpose of financial management? It is to maximize value and ensure liquidity, that is the ability to convert assets to cash, and it's achieve long-term sustainability. It helps to maximize value. It also helps to ensure liquidity, to be able to convert assets into cash at a very short time. And also, it helps to achieve long-term sustainability. Um, Management deals with decision relating to financing, investment, and dividend policy of the firm. So it actually deals with the key decisions that are needed in order to ensure that an organization run and it focuses on the financial aspect, investment aspect, and the dividend related policies of the firm. What are the objectives of financial management? The first one is wealth creation, that is increasing market value and shareholders' wealth long term. That is, the central objective is to increase the market value of the firm, thereby maximizing wealth of shareholder. Another one is the profit maximization. Um, this is a sole objective whereby there is a focus on operational profit without sacrificing ethics or stability. It remains a core of operational aim. So it is very, very important in financial management. Another one is ensuring liquidity and solvency, which means that a firm must maintain adequate liquidity to meet short-term obligations and solvency to avoid financial distress. Also, we have the efficient allocation of financial resources. This means that financial management ensures that resources are deployed in projects and ventures that yield the best possible returns. It ensures that resources are really allocated to where they are needed in order to avoid wastage. Um, Also, the risk management is one of their objectives too. That is, identifying and mitigating financial risks is essential to preserving capital and achieving consistent performance. We have the cost control and budgeting, which is the monitoring expenses and setting financial boundaries to avoid wasteful spending. And this is very, very essential. Another objective you can see is the strategic planning and growth. And this deals with the financial planning, which enables organizations to chart long-term strategies and secure fundings and also drive innovation and expansion. These are the objective of financial management. What are the importance of financial management? The importance of financial management. This can be seen in a number of ways. The first one is support business planning. It is essential. Financial management underpins the business strategies and it translates them into actionable plans through budget forecasts and business models. Also, financial management is important because it enhances decision-making process. That is, data are provided for managers. The data that are needed are provided for managers to make informed choices or decisions about investments, the operations and expansion of an institution or organization. Also, financial management is important because it promotes discipline. When we talk about it promoting discipline, that is financial control, audit, and reporting mechanisms, which prevents mismanagement, fraud, and inefficiency. So it helps in doing that. It provides a platform whereby discipline is provided financially to avoid fraud and mismanagement of funds. Also, it is important in building uh, confidence. It is important in building confidence. That is, it boosts investment and stakeholders' confidence, which is very important in financial management. What are the roles of financial management? It is important to know the roles of uh, financial managers, rather. It is important to know the roles of financial managers, and we have a number of it. And the first one is financial planning. The financial manager prepares budgets and forecasts revenue and expenses. So he's not just there to make some decisions that are rational, like just taking anyhow decision. He has a duty to prepare budget, forecast revenues and expenses for the organization. Another one is the investment decision. It takes the investment decision about the project using the net present value, the internal rate of return, the payback period. Also about he performs the role of working capital management. In terms of working capital management, it ensures that the organization can meet its day-to-day obligation by effectively managing cash, receivables, inventories, and payable. Another one is the risk and compliance. The risk and compliance, and that one deals with the mitigation of risk and ensuring that legal adherence is made possible. When we talk about financial management, it's one thing that we've learned to, we have an understanding, or we might have had an understanding of financial accounting. And how do financial accounting relate with financial management accounting? When we talk about financial management, we talk about financial accounting too, and we talk about management accounting. How do these two relate together? And about purpose, when we talk about purpose, the financial accounting deals with the external reporting, while the management accounting deals with the internal decision making. Also, for the users of financial accounting are investors and regulators. We have the managers and executives dealing with the management accounting. And then the focus of financial accounting is the historical data, while the management accounting deals with the future planning. And that is why it is necessary to get information for future use to make decisions that pertains to future. And about the regulations, The financial account makes use of general accounting um, principle. Um, they make use of the GAAP and also the IFRS, International Financial Reporting Standard. While for management accounting, they make use of flexible and it's flexible and there is no standard that actually guides it as compared to financial accounting. And when we now talk about financial management, we have the goal of financial management, which is very prominent. That is profit maximization and wealth maximization. It was said when we started as part of the objectives of financial management. Yes, now it is essential that we look into it. When we talk about profit maximization, the goal of financial management have undergone significant evolution over time, reflecting changes in the corporate environment and the expectation of stakeholders. The two prominent ones are the profit maximization and the wealth maximization, and it is important to understand the differences. Profit maximization refers to the process of increasing a firm's earning in a short term, typically by boosting the revenue or minimizing the cost. So, in a process of trying to maximize profit, it's either the revenue is being boosted or the cost is being minimized. And this is a very prominent principle in financial management when we talk about profit maximization. The other one is wealth maximization, which refers to a value maximization or shareholder value maximization. And it is a modern and comprehensive financial management objective. As per focus, profit maximization deals with short-term earning. It also does not put into consideration risk. It ignores time value of money, and decision made uh, may be short-sighted. Also, the focus is on owner's profits. It doesn't really focus on shareholders. It is majorly on owner's profits. And based on the measurements, the measurement is based on the accounting profit, and the suitability is based on the operational or tactical decision. For wealth maximization, the focus is on long-term value. The risk consideration is explicitly considered, um, and the time value of money is accounted for. The decision making is strategic and sustainable, and as against the profit maximization, which is short-sighted. For stakeholders' impact, it is not focused on owner's profit as profit maximization is. It's broader and focused on shareholders' wealth and overall value, and also the market value of share of firm. The measurement deals with the market value. It is measured based on the market value of shares of firm. And lastly, for the suitability, strategic planning and capital budgeting is being put to use. In conclusion, financial management ensures efficient resources use and long-term sustainability rather. It involves strategic decision-making in areas such as investments, financing, and dividends. So it balances profitability, liquidity risk, and ethical practice. Unlike the traditional focus, which is short-term profit maximization, the modern financial management emphasizes creating sustainable values for shareholders by considering time value of money, risk factors, and ethical business practice. This is an introduction we've done, and you can best find meaning to this in the notes. You can go through the notes and then find a better way of understanding what we have said. And next module, we'll be talking about the financial statement analysis, which is very important in financial and management. Thank you.